Hello, my dear students. How are you all? I hope you all are doing great. So, are you ready to start the class today? So, today I'm here to again share one of an incident that happened between my friends Abhay and Rajesh. Now, this Abhay and Rajesh, they both were my best buddies in my college. Okay. So, one day, what happened? When I reached the college, I saw that both of them were arguing to each other. Like they both were arguing to each other continuously, and after a moment, they stopped talking to each other even. Okay, so as a friend, I acted as a mediator and tried to talk to them. Like I asked several times to Rajesh that what happened, what is the reason why you both are fighting to each other. But Rajesh didn't told me anything. Then I talked to Abhay that you both are going to each other. So Abhay told me that we have planned to go out, and now we have different opinions about where we should go. Like I love to go to the cafeteria to eat the snacks and everything, but Rajesh wants to go to a particular restaurant. So they, for this little difference, they both were arguing to each other, and now both of my best friends were not talking. So I decided to make them sit together and talk. Okay. So when we talked to each other, we decided finally that we will cut the time of both the places. Like we will go to the restaurant as well for the main course, and for the snacks we will go to the cafeteria, which Abhay was suggesting. Okay. So, so now they both agreed to it and went for the outing, and it was a great weekend. Okay, so you can see that the differences, the different opinions can be there. Like we are all humans. Okay, we have differences. We are diverse. We cannot expect that our opinions will always match to each other. So we are diverse, but but how can we cope up with this situation, this problem? So it is the simplest way is to talk to each other, like understand the differences, okay, and settle down our differences so that we can like understand each other, okay. So in the accountancy as well, why now I was telling this incident is that in accountancy as well, there are two friends, okay, and they always like have differences, and the students, teacher, accountants, has the duty to make them settle down their differences and equate them. Okay. Now, who are these two friends? One is the bank passbook, and the other one is the cash book. Okay, these two, like bank passbook, as you all know, it is prepared by the bank itself. Like whatever transaction is done in your account, as the account holder, whatever transaction has been done in your account will be recorded in bank passbook. Okay, as you all know. And in the cash book, this cash book is generally maintained by us, like by the holder himself. Okay, so there are several cases because there are several instances where that these two friends do not equate with each other. That means that the balance of the passbook and the balance of the cash book does not match to each other. Okay, so when these differences occur, we create we actually prepare a particular type of statement, okay, which we will study today in the topic bank reconciliation statement. Okay, this bank reconciliation statement. So this is our today's topic. So as you can see, that bank passbook and cash book, they both can have differences. Now, I know that you all have the doubt like how these differences can occur, like why these differences are there. Okay, so there are several reasons because of which the differences could be. Okay, so we will understand them one by one. Okay, so let's take one instance, just one instance. Like for example, XYZ Limited. Okay, XYZ Limited issued a check. Okay, issued a check in favor of Mr. Ram. Okay, in favor of Mr. Ram, XYZ Limited issued a check of rupees. How much is the amount? Could be like it will be 2,000 for suppose. Okay, for 2,000 rupees, the XYZ Limited has issued a check. On which date? Okay, on 25th of February. Okay, when on 25th of February 2020. Okay, he issued a check in favor of Mr. Ram. Now, you all know that checks are valid till the 3 months. Okay, for the 90 days, 90 working days, the checks are valid. Okay, now on the 25th February 2020, XYZ Limited issued the check. So what will be the, now you will tell me, what will be the entry that XYZ Limited will pass? What journal entry will pass? It will be like what? Mr. Ram account debit to bank account. Okay, bank account, and this bank account will be like posted to the cash book. Okay, bank column of the cash book. Okay, so it will be rupees 2,000 here, 2,000 here. Now, what will be the effect of this entry? So the effect of this entry will be that Mr. Ram accounts will be debited by 2,000. Okay, that's okay. But the cash book balance is now decreased by rupees 2,000. I'm repeating. What will be the effect of this entry? The cash book balance will be decreased by rupees 2,000. Okay, that will be happen. Now erasing it. For suppose now on 31st March, okay, let's see on 25th Feb 2020, the passbook in the bank actually in the bank account of XYZ Limited, in the bank account actually, okay, actual amount will be, for suppose, is rupees 16,000. Okay, so here you can see on 25th Feb the bank account actual balance is rupees 16,000. In the cash book also. Okay, let's make it bank passbook. Okay, bank passbook. In the bank passbook, rupees 16,000 is the balance. And now in the cash book, for the cash book also on 26th Feb, the balance was 16,000. Till here, till this date, the bank passbook and cash book were same and equal. But after issuing the check to Mr. Ram, okay, after issuing the check to Mr. Ram, what happened? The cash book balance decreased by rupees 2,000. Okay, and now the new balance of the cash book is rupees 14,000. Do you agree with this? Till 25th Feb 2020, bank passbook and cashbook balances were same 16,000. But on 25th Feb itself, you can see in the question that XYZ Limited did what? Issued the check of rupees 2,000. Okay. Then they issued the check. They passed the journal entry, and the cash book balance decreased by rupees 2,000, and the new balance is now is rupees 14,000. Okay. But not in the passbook, because passbook is maintained as the actual transaction is done. Okay. When Mr. Ram will represent that check, when Mr. Ram will represent that check of rupees 2,000 to in the bank itself and gets the amount withdrawn, then only the passbook balance will decrease. Understand it very carefully. This passbook is maintained, as you know, is maintained by the bank itself. Okay. Whenever the actual transaction is done by your account, okay, whenever the actual transaction is done by your account, that only is recorded in the passbook. Okay. Now, XYZ Limited issued the check of rupees 2,000 on 25th Feb 2020. But is it necessary that Mr. Ram represented that check and on the same day? No, not at all possible. He might have represented that check on 1st of May. Might have represented that check on 1st of May 2020. Now just imagine when XYZ Limited will prepare his book of accounts. Okay, when XYZ Limited will prepare its book of accounts on 31st March 2020, what will happen? On 31st March 2020, what will happen? The cash book balance, okay, cash book balance will be rupees 14,000 as the XYZ Limited recorded, as the accountant recorded, but the bank passbook will show what? Will show the balance of only rupees 16,000, as Mr. Ram is representing the check on 1st May 2020. It hasn't yet arrived. Okay, so you can see the differences, how it has happened. Like XYZ Limited issued the check and they passed the journal entry, and now the cash book balance is decreased. They are fair from their side. Okay, but you can see here as well in the passbook, or in the bank passbook also represents the actual amount, whatever it is in the bank account itself of the XYZ Limited. Okay, like 16,000 is the actual balance. The rest 2,000 of the check has not been presented yet and has not been withdrawn. So why the bank will withdraw the amount, will decrease the amount? No, not at all. It will not decrease it. Okay. So in such cases, what will happen? The differences might occur. Okay. And there are several reasons. Okay. There could be several reasons. One more, like if you understand this one, if you have any doubt, you can ask me. Okay. If you have any doubt, you can ask me. Okay, now let's move to the another instance. I'm just talking about the instances or the reasons because of which the cash book balance and the bank passbook balance might differ. Okay, I'm just talking about few reasons. Okay, now the second example. Okay, now just take the second example. Let's take the second example. Okay. So Maheshwari Limited. Okay, I have the new name, Maheshwari. Maheshwari Limited has the cash book balance rupees 28,000. Okay, 28,000 on 1st August 2020. Okay, his cash book balance was 28,000. But what happened? But on 15th August, okay, focus on the dates. Okay, on 1st August, the balance was 28,000. Okay, on 15th August, what happened? 15th August, bank credited the interest amounting rupees 2,000 in the account. Okay. Now tell me, what will be the bank passbook balance? Okay, what will be the bank passbook balance? Okay, so till here, till 1st August, cash book balance is 28,000. Okay, so let's assume whenever it is like this, you have to assume that bank cash book balance and bank passbook balance both are same or like 28,000 till 1st August 2020. Okay, but here you can see that on 15th August, bank credited the interest amounting to rupees 2,000 in the account. Okay, directly in the account without intimating anything like we are crediting rupees 2,000 in your account. They haven't intimated anything, and they have just credited rupees 2,000 in the bank account of Maheshwari Limited. Now, what will be the bank passbook balance? Of course, it will be what? It will be rupees 28,000, which was in 1st August, okay, plus rupees 2,000, okay, total amounting to rupees 30,000. Okay, so this will be the bank passbook balance, as bank directly credited rupees 2,000 in the bank account. Okay, as for the interest. So you can see, but in the cash book, now talking about the cash book, you can see that in the cash book, the Maheshwari Limited have no information how like why about the interest about the interest and the credit. Okay, about the 2,000 rupees, they have no information about it. So what will happen actually? Again here, this is one of the instances where what happened, where the bank passbook balance and the cash book balance will again differ. Okay, what will happen? The bank passbook balance, sorry, the bank passbook balance and the cash book balance will differ to each other. As in the cash book, Maheshwari Limited will have no information about the interest credited, so they will represent rupees 28,000 only. But in the passbook, what will happen? The 2,000 has been credited. That's why the total amount of the bank account is now rupees 30,000. So you can see that how these instances, how these reasons, how these transactions might differ. The balances between these two book of accounts. Okay, so this is why we prepare bank reconciliation statements. Okay, I hope you understand. Now you understood like why we are talking about the bank reconciliation statement and why it is really important. Like when we are closing the books of accounts, it is very much necessary that all our assets and liabilities are represented on their by their actual value. Okay, even the cash book, even the bank. Okay, cash in bank and cash at bank, these are also the assets, right? So the cash at bank should, the amount should be represented in a very should be represented truly. Okay, so that's why bank reconciliation statements are prepared, so that we can cope up, like we can identify where why these differences have occurred, and we can resolve them. We can actually properly correct our book of accounts and represent the true value of the bank account. Okay, so these are the few cases. Now I'm just writing up down the last thing, like the differences, like these reasons why these differences occur, has been divided into three parts. Okay, into three parts these differences has been these errors occur. Okay, the first reason, okay, reasons has been divided into three. Number one is the timing. As you saw in the first instance, that the Mr. Ram in the first example, you can see that Mr. Ram was the check was issued to him in the on 25th Feb. But what happened? He didn't represented it till the 1st May. So that's why the timing of the issuing of check and the actual representation was very much different. And this difference in the timing actually made the difference in the bank passbook balance and the cash book balance. Okay, so this is the first one is the timing. Now second one is the transactions by the bank, transactions by the bank. Okay, so transactions by the bank, you can see this in the again in the second example, that there can be the differences. Okay, because sometimes do bank actually performs some transactions without intimating to the account holder. Okay, because of that, sometimes there could be the differences in the bank balance and the actual bank balance and the cash book balance. Okay, and the third one includes all the other errors. Sorry, all the other errors and omissions. Okay, omissions. Like sometimes the amount you have already studied these errors and omissions in your rectification of error chapter. Like these errors and omissions are what? Sometimes we pass the journal entry, okay, with the different amount. Like the 2000 should be debited from the bank account. Instead, we just debited rupees 200, okay, or maybe 20,000. These errors might happen, as we all are humans, and the humans are the only one. Humans are the accountant is passing the journal entry. He is also human. He might could have do some errors. Okay, so that's why these errors and omissions could happen. And again, because of these errors and omissions, there will be the differences in the two books of accounts. Okay, so these are the three major the reasons because of which the differences could happen. But there are several reasons inside this. Like these are the big three topics, big three reasons Under this, there could be several reasons as well. Like in the timing could be in the issue of check or the credit of the check amount. In the transaction by the bank, it could be the debit, like interests are credited, as we saw in the second example. But there could be bank charges which could be debited. Okay, sometimes dividend are directly collected in the bank. Sometimes customers directly pay off in the bank account of the business. So there could be several ways by which, because of this, transaction by the bank also is can also play a major role in the differences. The last one is the error and omission. So these error and omissions could happen in various ways. There could be the omission of the entries. There could be the error in the amount. There could be error in the debit or credit. Okay. So these error and omission will uh, uh, again will incur the difference between the bank passbook and the cash book balance. Okay. So this is all for today. Okay. So now I will give you one question which you will have to solve. Okay. This question will be on the timing. Okay. You all have understood that how timing is one of the major reason. So you do not have to prepare a bank reconciliation statement properly. You just have to calculate the differences. Okay, you just have to calculate what will be the amount or why this what will be the bank balance amount because of this timing difference. Okay, so this homework you will get from the book. I will just write it down. Okay, I will just show it and give it to you. So that's all for today. Okay, thank you very much.